I guess a market crash is subjective to, what I think is a market crash could be different from what you think is a market crash, but based on my conversations, usually around the 20% mark is where people are like, that's a big enough pullback for me to be intrigued to re-enter the market. 25% drop, and this is where I'm starting to have conversations where people are like, absolutely, I'd be interested in getting back into the marketplace if I could have 25%, 25% off discount coupon or whatever it happens to be. And so this just showcases where we would need to be or where we were in the marketplace for us to be able to get to those numbers from today's price points. I can make a full presentation or video with you guys for 40 minutes on the market as a whole, but my actual advice in this video, if you take like anything away,
Hey YouTube, this is Andrew. Welcome to the Real Estate Investing Channel. I am your guest host, and here we have Emma, Pace of Base, the master of real estate in Toronto. I'm looking really forward to seeing what she's got, to see what the highlights are on the month of May. So Emma, welcome to the show.
Thank you so much. I'm looking forward to it.
You've been on this show way more than I have.
I have been on here for probably over a year now, which is great. So it's interesting to see some of the predictions come to fruition, and then also just to kind of see how the market's changed over the last year. So I think we're in for another very interesting month worth of statistics and good conversation for sure.
Yeah, and Toronto's one of those markets I've always found that everybody else around Ontario isn't used to all the turmoil we've had over the last 2 years. But Toronto has seen this before.
Yeah.
And I remember back in 2018 when we went through our personal bubble and all hell broke loose, and then interest rates went up and this and that and the other thing. And now everybody has experienced that.
Yep.
And so we're all on the same page now. So what's going on in Toronto specifically right now?
Yeah, so let's look at the numbers, and then I think we should talk a little bit more about kind of market sentiment, confidence or lack thereof, and then potentially market cycles, and where we may or may not be at in this cycle. And I guess it will be up to the viewers to determine kind of where they think we are, because I think, to be very honest with everybody, just kind of set the tone. If anybody tells you that they know exactly what's going to happen over the next couple months, I would argue it would be a tough call to make, and so I think right now it's really important that anybody's looking to make a move has a really slow and steady approach and is making sure that it's a right step for their future, and it's not necessarily a short-term speculative play. But I do think there are good areas of opportunity in the marketplace for sure. So I always like to go over the month-over-month performance. And I have to give a shout out to my brokerage Zoocasa, because they always pull these infographics, and they've started to put the month-over-month stuff in there now, which I love. And so if we look, this is focusing on Toronto proper. And what I would say to these numbers on the right-hand side, looking at condo prices, have basically gone from 830 to 820 in the last month. Towns have stayed relatively flat, 959 to 951, not a big difference. Semis made the biggest move to the downside this last month, but they also made the biggest move to the upside the previous month. So it's kind of leveled themselves out. And then detached homes are up a little bit. So basically from 1.92 to 1.95. But for me, looking at this is a pretty not so sexy month. I would call it relatively flat. If we're kind of within 1% on either side, I think it's a relatively flat month, which for me is really nice to see, because if you scroll our videos back to January, it was 7%, 8%, and it was just unsustainable for growth. And so we're starting to see things kind of flatten out a little bit in Toronto, which I think is nice, because it means that we're getting more into the neutral zone, and we'll talk about that in a little bit as well. So yeah, if we're looking at price points, you're looking at low 800s for a condo in Toronto, about 950 for a condo town, about 1.5 for a semi, and then just under 2 million for detached properties.
Right on.
So this is where I think things get really interesting, is looking at the outer areas of the GTA in comparison to Toronto, right? And so this is where we're seeing the biggest movement to the downside. So we saw Durham pull back almost 7%. So we basically went from 1.15 to just under 1.1 this last month. Peel went from basically 1.2 and 3/4 to 1.2 and a half. Halton is down from 1.5 to just under 1.4, and then Toronto as a whole has actually appreciated a little bit by 3%. And so it's interesting because I've been having conversations obviously with people from different marketplaces, and it seems like the marketplaces that saw the drastic run up as a result of COVID are now coming back to like a little bit of equilibrium, whereas certain areas of Toronto didn't see that drastic run up. A lot of people left Toronto as a result of COVID, and so that's why I think we've seen this kind of like flattening or leveling off in Toronto, but we haven't necessarily seen that pullback. These areas, Durham, Peel, Halton, I don't actually have the numbers in front of me, but we're probably looking at like a 40 to 50% increase from the beginning of COVID to kind of, beginning of this year.
Oh, for sure.
Yeah.
Yeah, there was a mass exodus, and then everybody else in the surrounding areas, markets went chaos, and maybe now we're seeing a leveling out, which actually isn't a bad thing. I mean, a certain amount of market predictability makes everybody's lives easier, right?
Totally. I don't know. It's a tough thing to say because you never want anybody to lose money, right? You don't want to be the person that purchased at the peak, but to be able to see a little bit of equilibrium, like the growth that we had seen in these markets during COVID, it's unsustainable. There's no way that we're going to continue to see 20 or 30% growth year over year. It just doesn't make sense. But I also think that other factors outside of just real estate itself come into effect when we look at people commuting and going back to work now and gas prices being so high. Like, these are the conversations that I'm having. And so just for anybody that's watching, to give you a little bit of further context around where I try and get my information from. So I'm obviously big on data, but this information doesn't come out for 30 days. So this happens and then we get the information later, right? And what I try to do is to say, like, how can I get some information for my clients now? And so because I run a real estate team, we've got 4 licensed agents on the team and an inside sales agent, and we're basically on the phones all the time now, right? We're less active in the field because there's less showings happening right now. And so we're trying to stay on the phones as much as we possibly can. And so right now our team is doing probably about 1,500 calls a week. So 1,500 conversations is a lot of data to be able to get to understand like what the market sentiment is for people that are looking to buy and sell real estate. And one of the biggest things is, well, I moved out to wherever I live now, but my employer wants me to come back downtown, whether that's permanently or whether that happens to be 2 or 3 times a week. I thought that I was going to be stationed work from home permanently, and that doesn't happen to be the case. Gas prices and commutes, gas prices are high and commutes are back in Toronto. And so now people are going back, they moved out for the COVID lifestyle, and now they're like, maybe this isn't the lifestyle that I really needed. Right? Yeah.
So you see the swell go out and then it comes back in.
A little bit. Yeah. And so, I don't think this is I feel very confident that this is not a forever pullback, but I think it's a matter of trying to figure out, like, where do the opportunities lie for the right people? And right now is a great time for some people, and it's a terrible time for others. So a slow and steady approach really is at least my advice right now.
Yeah, no, absolutely. I mean, it reminds me a little bit of, I think it was probably between 2020 and 2021 when you started to see the condo market prices came down because anyone living in a 500 square foot box wanted more space, get out, work from home. And then, 6 months later, the condo market started coming back because now there's a vacuum and people see, oh, cheaper prices, I'm going to buy a condo. And so, like, everything sort of ebbs and flows, right?
Absolutely. And I think now more so than ever, like, I can make a full presentation or video with you guys for 40 minutes on the market as a whole. But my actual advice in this video, if you take like anything away, now is the most important time to find a specialist in your particular area, because the market is the most fragmented I've ever seen. Certain areas, nothing's changed. Offers, like tons of offers happening. Certain areas, massive pullback. Like you really need to not look at this as one big brushstroke of the market. And I think kind of like earlier this year, or potentially certain areas of COVID, you could kind of look at the market with one big brushstroke and be like, this is kind of what's happening across the board. That's not the case here. You really need to find a specialist in your particular area to get a very micro understanding of what's happening, because the market is very fragmented right now.
Yeah, and it's definitely a time frame issue in the sense that if you're even using comps for your price strategies and stuff, that used to be, oh, I could pull 60 days, I could pull 90 days, and then in 30 days. And like now, I think anything more than a couple of weeks is completely outdated, right?
It's challenging. Like you do have to take the market movement. You really do have to take the market movement into consideration. And I think it's funny that you say that, because I was having this conversation with Peter a little bit before we hopped on here. And I think what we're going through right now is buyers and sellers like really trying to figure out a little bit of we're trying to figure out equilibrium in the market, right? And so how I've kind of explained this to my team and my clients, if you think about hockey, you have the defensive zone and you have the offensive zone. We also have the neutral zone. And I find that buyers and sellers either live in the offensive zone or the defensive zone, and they completely forget about the neutral zone. So sellers still want February prices, and they still think that they're going to get multiple offers, and they still, you know what I mean? They're living in that zone. And buyers haven't had power in so long that all of a sudden the market starts to shift a little bit, and they're like, I'm taking all of the power and I'm living in my zone now. And you're like, whoa, why did we skip the neutral zone? That's where the bulk of the game is played. So why don't we come to this equilibrium and figure out that maybe it's not 15 offers per property anymore. But that also doesn't mean that you're going to get a 50% discount off of the purchase price. Like maybe you're the only offer that comes to the table, and we can kind of work out and negotiate a reasonable price. And we have to take into consideration seller motivation, buyer motivation, all of these things that we take into consideration as agents when we're negotiating. But just because there's not 15 offers at the table doesn't mean the seller's going to take 50% off of market value for the price. So there needs to be some type of neutral zone here.
Absolutely, 100%.
So I think what's interesting more than ever is just looking at what our current prices are versus peak prices. So if we look at peak prices from kind of February, we have already seen Durham pull back 15% in terms of like overall average price. And this is composite, right? Peel about 6, Halton about 10, and then Toronto still up. So it's interesting because when we have conversations with people, one of the questions that we ask is, tell me a little bit about maybe why your plans have changed. And a lot of people say, well, I want to wait and see what happens with the market, right? And we're like, cool, that actually makes sense. Like you should actually do that right now. What are you waiting to see? Right? Because I'm waiting to see what happens. Like, that's fine, but like, what are you actually hoping to see, or what are you waiting to see? And most people will say, well, maybe a price reduction. And it's like, well, if the prices came down 10% or the prices came down 20%, it's like, but that's actually not the real situation, because there's still marketplaces where that's actually happened. And so that's, I think if that's what you're waiting for, and that's actually what you're waiting for though, then you need to, again, look really, really micro at your marketplace, because you might be getting close to that threshold right now to compensate for that amount that you're looking for in terms of a price reduction.
Yeah, we might be there. Yeah.
Yeah, and again, that's not going to be standard across the board, but like, if you're someone who's been sitting on the sidelines for a long time, and you're thinking like, I might actually want to do this, like actually do some research. Don't say, I'm going to think about this and I'll talk to you in 2 to 3 months, and you haven't actually thought about it. No one goes to sit down and like, hey, can you call me back in June? On June 3rd at 6 p.m., I'm going to speak with my spouse. Like, no one does that, right? Yeah. So sit down now, talk to a professional in your marketplace, and then make a plan based around that. Don't wait to make a plan later, because that's when you actually get started. Start now and have a really slow and steady approach to this. You don't have to rush today, but you need to be informed.
And you make a really good point when you say June 3rd. I mean, that was a bit of a joke, but in reality, when people say, I'm going to wait and see, what does that exactly mean? Because you could wait 5 years and the prices would be up.
Yeah.
So where do you cap it? Because you could perpetually be waiting to see. So
Yeah.
I think that it might be a good idea to actually say, I'm going to check with my, my trusted realtor every week for the next 6 weeks and see where the trend is going, and then choose to pull the trigger or not, right?
Yeah, absolutely. Absolutely. I think there's going to be people that watch this video and they're thinking in their head, I don't want to talk to them because I don't want to waste their time. You're actually not wasting someone's time if they value themselves or they look at themselves as an advisor. They won't look at it as a waste of time. They will only look at it as a waste of time for you if they're trying to sell you something that day. So when you choose an agent, make sure that you're choosing an advisor, not a salesperson, right? And so that's something that I'm always trying to reiterate to my team is like, we're not like, yes, we sell houses, but we're here to advise based on people's long-term goals so that they continue to use us again. And so you shouldn't be sitting behind the screen watching this video today saying, okay, well, I don't want to bother somebody for information because I feel like I'm going to waste their time. If they're an advisor, they want to advise you over these next 6 weeks, and they should have a slow and steady approach because nobody knows what's happening in the market right now. But we can make a decision around what's going to be right for you and your family for the next 25 years.
And if you do talk to a realtor and you do feel like you're wasting their time, then perhaps that's not the realtor for you.
The right fit.
You should move on.
Yeah. Totally. So yeah, I think don't sit behind the screen and feel guilty about asking questions in today's market. I think you need to ask more questions in today's market to understand where the opportunities are for you specifically.
Right on.
So let's hop into this. This is interesting. So green is condo inventory, black is freehold inventory. We are starting to see that trend upwards. And if you look at quite a few of our videos from earlier this year, you will see that it was kind of nosediving, which means, as we continue to see these trend lines go down, that typically means that prices are going up or that there's more activity in the marketplace and sellers have more power. This is a good graph for what I would call the balance between buyers and sellers, right? So as it gets lower, this is for sellers. As it gets higher, this is for buyers. This is why I talk about the neutral zone, because we're getting closer to the neutral zone right now. And the neutral zone would be, 4 to 6 months of inventory would be considered a balanced market. So we're trending towards the neutral zone. So if you're a buyer or seller, just understand, technically, the numbers show that we're still in a seller's market, but we're trending towards more of a neutral market. And if you're a seller, please understand that the market is not the same as what it was, and it's actually trending the opposite way right now, right? So the most condo inventory that we've seen in the last 53 weeks on the marketplace right now.
That's an interesting spike there in February and March.
Yeah.
February.
Yeah, I don't know. I don't exactly know what happened at the end of the year. I mean, if you look kind of like December, there's usually not much inventory. Very few sellers are hitting the market December 21st. Some people like to launch at the beginning of the year, and then basically we were in lockdown, so this kind of disappeared relatively quickly, is my understanding of what happened with that graph. But if we look here, we're trending upwards. Curious to see what continues to happen. We'll talk about kind of like what factors affect long-term, like sustained affordability, and I would say affordability in quotes, but what factors affect this pullback, like a sustained pullback. And so I'm curious to see what this months of inventory trend looks like next month. So if we look, this is also interesting. Last time I made this video with Adam, we were at 58% for terminations. So listings that got canceled. And so oftentimes, just for any viewers that might not understand what this means, if someone lists a property, let's say a property is worth 1.3 million, maybe the seller's listed at 999. They underprice it because they want to drum up interest and get into a bidding war, right? So because we don't have the same amount of activity that we had earlier this year, a lot of properties are not getting the offers or the action that they were expecting. And so if you list it at $999 and you're expecting to get a price point of, a final sale price of 1.3, and you get an offer at $1,050,000, a seller might say, I don't want to take the offer at $1,050,000. They're not obligated to take your offer. They would then terminate the listing and they would relist at 1.299 or whatever happens to be. And so this is just a really good indicator when we start to see this trend upwards. And this is for freeholds, this is for condos. We're having a ton of sellers try that, February strategy, not have success with it, and then relist and come back to market. Okay. And this is exactly what I was talking about with trying to find that equilibrium and like setting the right expectations, because certain properties are actually getting a ton of offers. Last night we put in an offer for a client, 9 offers, right? Mm. Another one tonight that I actually think should get 9 offers. We're going to be the only people. So it's a really interesting market where you do kind of have to test the market. But this indicator here is basically showing us that unless a property is extremely rare, like has an amazing view, backs onto a ravine, like has something that you don't know you can replicate again, I don't think there's any real reason to compete. If it's a standard rectangular 1-bedroom plus den condo in City Place, I don't think you need to compete, because I would feel confident that I could find that product for you again. But the ones that are extremely rare and have these rarities to them, those are the ones that are likely still drumming up a lot of interest, because we don't know if we can replicate those things again.
That's a really interesting metric to follow, because it doesn't mean the same thing in different times in the market. Mm-hmm. Like a year ago, that doesn't mean the same thing that it means right now.
No, totally. And I think that's kind of like half of pulling data, right? Is trying to figure out like, what does this actually mean for me right now? Yeah. Right. Yeah. But
I love that you highlighted that though, because that's really interesting in how you say it. It's showing sort of a blending or trying to figure out what strategy is going to work in this particular market, right?
Yeah, and I think it's like this is the easiest way. Because there's also a part of you that has to be like an understanding human being to people's situations, where it's like, if I was a seller and I knew nothing about the real estate market other than the market was crazy in February, of course my expectations are going to be that I want February. And it's really hard if an agent comes into your house and is like, I can't get you that price, but I can get you this, and this is what's fair. You're going to be like, well, you're not working hard for me. So it's completely understandable that someone would respond that way. But when you can actually bring this data in and say, this is what's happening, then that's how you find the neutral zone. And that's how you get someone out of the offensive or defensive zone.
Are you finding, while we're on that topic of cancellations or relistings, are you finding that the strategy is changing at all to the just list at the price you want, or combination thereof, or...
Yeah, we're definitely, I guess what you're saying is
people are trying to figure that out literally right now.
That's what people, so 100% you're correct. That's what people are trying to figure out right now. And a lot of it has to do with expectation setting with clients, right? And it's also like, if we're representing a seller, like we don't want to leave money on the table for them. And sometimes you aren't expecting it, but you do get a ton of offers, right? And sometimes you're expecting a ton of offers and you don't, like I just said. So oftentimes people will still try and go with that older strategy first as a preventative measure to not leave something on the table. But I think it's really critical that if you're an agent watching this and you go into a listing presentation, you need to be able to say to your clients, if we're going with this strategy first, I want you to understand that 71% of the time it's not working, but we can still try it to see if we're the people that get the 29%, right? However, if that doesn't happen, we need to discuss our plan B, because there's a 70% chance that we might have to discuss that plan B. And so that is how you build the right relationship with your client, by setting the right expectations. Because if you don't say that on the front end and they expect they're going to get over, and then plan B happens, it's a much more difficult conversation to have 1 week after you've already set the wrong expectations than for you to just say that at the beginning.
Absolutely.
Right? And the data supports that. So it's not like you necessarily did anything wrong other than not set the right expectations. So this is a really good leading indicator of showing that we are trying to find a little bit of a balance between buyers and sellers right now. This I just thought was super interesting. Scott Ingram, if for some reason you ever watched this video, thank you for sharing this. But, oftentimes people say, I guess a market crash is subjective to, what I think is a market crash could be different from what you think is a market crash. But based on my conversations, usually around the 20% mark is where people are like, that's a big enough pullback for me to be intrigued to re-enter the market at that point in time, right? Like I think the market kind of has a little bit of a barrier of bottoming out. And so Scott prepared this, or grabbed this from somewhere, to show us how long ago was a 25% drop. So how long would we have to revert back to be able to find that 25% price point in Toronto? And so we're going back like 14 to 15 months from today. Essentially, if you bought from March 21st or prior, I think you're good because you've set yourself a really good buffer for a 25% drop. And this is where I'm starting to have conversations where people are like, absolutely, I'd be interested in getting back into the marketplace if I could have 25%, 25% off discount coupon or whatever it happens to be. And so this just showcases where we would need to be or where we were in the marketplace for us to be able to get to those numbers from today's price points. So we're looking at, March 21 or February 21 prices.
Wow.
So really not that long ago, to be honest. Okay, cool. And I also thought these two slides were super interesting. So obviously as rates continue to go up, most first-time buyers or people that are maybe not as educated with how mortgages work because they're super scary and there's a lot of information to learn about them, they'll typically just go for a standard 5-year fixed rate, right? That's usually the clean, simple, easy solution for end users. What I thought was interesting is looking back here, if we go back to 2013 to now, we are way beyond the peak of where we've ever been for variable rate selection. Like almost 57% of people are selecting to go variable at this point.
That's crazy.
Crazy, right?
Well,
So,
I guess when the trend was going down, then it made a lot of sense for people could understand that.
Yeah, it's just I think the 5-year fixed is usually just like it's a clean cut product. Most people kind of go with it, right? But I think the reason that this is happening, if you look at kind of like fixed rates, I actually just pulled this today. So if we look at fixed rates, and this is on Rate Hub with their posted rates, and we look at variable rates, there's obviously a very distinguishable gap between the two. Now, the number one argument is, well, these could increase. And so I could be paying this in the future. Should I just lock this in now? With variable products, there is a way to get like a fixed payment variable. So your payments don't change, but your amortization would, depending on how much interest you have accruing, right? But I think the reason why is because of the stress test, very likely. And so if we look down here, the minimum qualifying rate for a stress test is 5.25. So even if you got a rate of 1%, the bank is only going to lend you what you could otherwise afford in their eyes at 5.25%, right? What's interesting, and we haven't seen this for a long time, is it's 5.25 or whatever is offered to you by your lender plus 2%, whichever is higher. We are now in the whichever is higher. We were always here. We're now on this back end, but we are not on the back end for variable. So as of right now, if you go with a variable rate, your overall affordability has not changed, right? How much you can actually borrow from the bank hasn't changed with variable, but it actually has with fixed. because now you're being stress tested at 6.2 instead of 5.2. So you can actually borrow less.
Interesting.
Yeah.
Yeah, good point. Good point.
Right. So I think it's just these two things kind of come into effect or kind of like into play together. But it's just interesting to understand, like, if you go the variable route, your affordability hasn't changed. You can still borrow, even though rates are up, you can still borrow what you could have otherwise borrowed in February. You couldn't with a fixed rate right now, though.
That's a very personal decision too, because I imagine like the way that a homeowner that's going to live in the property would look at interest rates for maybe they're projecting out 10 to 15 years that they might live in that house, versus, you know, an investor. I'm bullish in the say that if I'm getting a mortgage at 2%, there's a lot of rate increases before I actually ever hit that fixed rate.
Totally. I think my number one point of what I'm trying to like pay attention to going forward is we have this term that gets thrown around regularly, which is affordability, affordable housing, right? And it's like this catchphrase for like what everybody wants. But what we need to understand is there's a couple of different factors that come into affordability. And when I think about what most of my clients want, most people say, I'm buying a house, or I'm buying a house at $1 million. They're not buying a house at $1 million. They're buying a monthly payment that they can afford for 25 years. That's what people are buying. And so all of these things that come into effect, and you're like, oh, the market's pulling back and I can get a better purchase price, and so housing is more affordable because I can get a better purchase price, is actually not true. You'd have to do the math in your particular area to see if housing is actually more affordable, because if you're paying a higher interest rate, you might have a more affordable purchase price, but you actually might be paying more on a monthly basis given the rates. So affordability hasn't got better. It's actually got worse if your rates are higher and you haven't seen that pullback in your marketplace. Absolutely. So I think it's really important to kind of read between the lines, because affordable housing is a really sexy headline, but it's not actually being accomplished with these rate hikes. And even though we're seeing a pullback in purchase prices, with the purchase prices, you do have a couple of things. Your down payment is less, which is nice, and your land transfer tax in Toronto, which is a good chunk of change, is also reduced. But are you just kicking the can down the road by reducing those costs and then paying them in interest for 25 years later? I don't know. It's tough to say. You have to make your own decision on it. The whole point of this situation is to understand, is affordability actually improved? I don't know. It looks great on one side of the coin, and it doesn't look so great on the other side. So you have to determine based on your particular market, is affordability actually improving if prices go down, or what's that equilibrium with your monthly affordability, if that's what you're looking for?
As with many things, the answer is it depends.
Yeah. Right? It's up to you to decide.
Yeah.
Cool. So let's hop into the condo market stuff really quickly. This just kind of goes back to the terminations, and this is for both buyers and sellers, but people who are maybe strategically thinking about pricing their properties. If you look here, this is Toronto condos that have sold 20% over the list price. We have seen that drop by 100% since March 1st. So this comes into effect when people are like, should I just go really, really low on price point to get people through the door? 15% of condos are selling 20% over asking. So you really need to be strategic with your actual price point, because if we look at these numbers, you have a 15% shot of getting 20% over your asking price at this point in time. So you, again, going back to strategy, pay attention to this, because this can really, really, really be a good leading indicator as to kind of where you need to be from a strategy perspective.
And it's interesting how different it is from the housing or the detached houses.
Yeah, I mean, I think they kind of go hand in hand. To see the other one with the terminations going up and to see over list price coming down, they should work together. But I just think, the condo market technically has stayed relatively strong. You know what I mean, for the most part. And I think a portion of that is just because you have a lot of entry-level price points. Entry-level price points will usually stay relatively strong because you have that demand in there. But I think for anybody that's looking to go to the market that's a condo seller, you do have to take this into consideration because the buyer mentality around purchasing is different. They're not as willing to spend 200 or 300K over asking on a 600K condo kind of thing, right? So you just have to be a little bit more strategic with your list price strategy.
It's interesting what you just said about the entry-level houses. That I've always remembered something that Matt McKeever actually said is that if you play in the entry-level house market, you don't have to be as concerned because there's always going to be that demand for that particular market.
Totally.
So you're sort of hedging your bets a little bit by playing in that area.
Yeah, and I think look, there's a lot of uncertainty in the marketplace right now, right? There's fear in the marketplace. People, there's inactivity as a result of uncertainty, basically, right? And so what's really important, though, is people's desire to own a home or to purchase real estate has not changed at all. They're just scared. Mm-hmm. And so as a result of being scared, their time frames get pushed out, right? And so that entry level is still staying strong, but I agree with you. Like, there's still, for someone to own their first home or their first condo, like, that's not going away. It might be harder for someone to make a move and say, okay, well, I already have 3 bedrooms. I could use a 4th and I could use a finished basement. Maybe not as much motivation for someone to make that upsize in this type of marketplace, but people's desire to actually just get into the marketplace and just be on the property ladder has not gone away. Mm-hmm. So let's talk about condo numbers. The West End is actually down month over month here. And so we went from 764 to 720-ish, okay? Toronto Central has stayed relatively strong. Like, the bulk of the trades are going to be down here in CO1, CO8. And then Toronto East has stayed relatively strong, like basically flat, and these guys are down. So what I like to do is always break it down to the most condo dense areas, because those big wide circles also take into consideration all of these areas which have less condo density. So what's very interesting is to see these are the 2 cores, okay, and this is the cheapest. These have stayed the strongest, and I think it's because of those reasons primarily, right? So the biggest movers to the downside that we saw were Mimico and North York, CO7, okay? So average price point for condos downtown in CO1 is about $850 to $856 in CO1 and CO8. It doesn't make sense to me that someone would pay $862 for a condo in Mimico if they could pay $856 for a condo, or $854 in a condo downtown core with no commute, right? So I think we kind of found that balance there a little bit. This is usually highest price. These 2 are usually mid, and this is usually lowest, just to kind of set the frame, right? And so why do we think that this one stabilized? Because this only went down by 2%. Probably because the price point is $650, and that's as entry level as it gets. So again, based on our conversation before, you're just going to continuously see demand in the lowest price point because there's so many people that just want to get that entry level product. And this is like everything. So green is 0 to 7 days on market for active listings, okay? Yellow is 8 to 29 days on market, and orange is going to be 30 days plus. So let's look at this. We are seeing a lot of condo buildup in this 8 to 30 day range. And so going back to my earlier point of not rushing and taking a slow and steady approach, unless you have something that is amazing that you cannot replicate again, there is really no urgent rush for you today. It sounds counterintuitive for a real estate agent to tell you not to rush to find something, but you actually do have a lot of buildup and a lot of stuff sitting around. So you have selection at this point in time.
You can wait for a dated listing and get it possibly a little bit cheaper.
Totally. It's trying to figure out how long do you wait? Because I had the same thing with a client last week where the seller was adamant on getting one number, and she was like, "Oh, okay, I could probably do it." And I'm like, "I don't think we should do it. I think we should wait." She's like, "Really?" I'm like, "Yeah, I think we should wait a week." let's see if he calls me back. If he calls me back tomorrow or he calls me back over the weekend, I'll know there's some motivation, right? Who calls me on the weekend? All right, we're willing to take 5K less. You guys want to come back to the table? And then I'm like, we'll just wait it out, blah, blah, blah. We find her another unit that was way better for the same price, right? Yeah. And so that waiting worked. But you also need to understand that you can't wait forever because somebody else is going to come in and slide and take that unit at some point in time. But don't rush. This isn't like at the beginning of the year, we were sending clients listings same day. So we'll usually do a 9, 12, and 4 p.m. check for our clients. And it was like the market was so hot, if something was great, you'd have to go see it that day. You don't have to go see things on day one. You have a little bit of time. So just take your time and don't have FOMO right now. You're going to be totally fine. You don't have to overpay. You can have conditions. You can have a comfortable buying experience, but there's the uncertainty of the marketplace. So you have to figure out, what do you want? Because everybody in February is telling me, I don't want bidding wars. Okay, wait, there's no bidding wars now, but there's the uncertainty of the market. So when you say, I'm going to wait until the market heats back up, then you're asking for bidding wars, which you told me you didn't want. So you actually need to figure out exactly what it is that you want. If you want a comfortable buying experience and you're okay to ride out this either investment or purchase for 5, 10, 20 years, I actually think there's a great opportunity for you to find something and have a comfortable buying experience. If you want to buy something and sell it next year, maybe hold off.
Yeah, for sure.
Even though the sales market has pulled back, the one thing that we've seen really pump up, and I'm sure this has probably been standard across the board, is rental market. The rental market, and so I always keep a small sample size just to kind of keep things fair because there's just so many variables that come into effect. But with this particular sample size, we saw in March, this is a 1-bedroom plus den in the waterfront community, has to have balcony and has to have parking, and it has to be over 500 square feet. Last month, we were at $24.73. This month, $25.50, almost $100 a month rental increase in 1 month. So the rental market's back on fire because a lot of people who are on the fence about buying have just locked in their rent again. And so bidding wars are back on rentals.
Oh, wow.
Yeah. So good news for investors, but with the rates, still a bit of a challenge. You're definitely not cash flowing in Toronto right now, just to let you guys know. For condos. And then I track this. I've been tracking this since 2018, but to understand where we were, because we saw a big dip in rental prices as a result of COVID. Obviously, everybody left. We were seeing people pay tenants to come in and all that kind of stuff, right? And so if we look at pre-COVID and we look at where we're at now, we are well beyond the peak for 2 bedrooms. We're at almost $3,000 a month is almost the average cost for a 3-bedroom, for a 2-bedroom rental. We're at almost $3,700 a month for a 3-bedroom rental in Toronto. And then we're basically, and again, this was at the end of Q1. So by the time we're recording this, these are probably even higher, just given the fact that the market's peaked a bit. So we're pretty much back right at the peak for 1-bedrooms. We're still trailing a little bit for bachelors, but if we close that gap, I wouldn't be surprised next quarter. So good news for investors in that regard. Maybe not so great news for renters, but if you're a renter, I'd urge you to lock something in sooner rather than later if you're on the fence about moving.
Right, good advice.
And then this, I just thought this was a really, really interesting chart. And it's by this guy. Anybody that's on Twitter should follow this guy. He has the best GTA statistics. Zealand, I think is how you say it. But basically, if you want to figure out how mortgage rates are going to impact your affordability, on the top axis here, you have the starting mortgage rate. So this was February, right? So we'll say 2.75. We say the current rate has gone up by 1%, so 3.75, and we come across and we go, your affordability goes down by 10% as a result of that. So it's just a really good cheat sheet to see kind of where we were to where we are or where we're potentially going to figure out what that's going to look like. So if anybody wants a copy of this, send me a DM on Instagram, and I'm happy to send it across. I just thought it was super interesting. And then the last two things. So I saw a friend of mine post this the other day about how Toronto's real estate market has reacted to unprecedented times in the past. And so we've seen, and again, this is what I was saying at the beginning, it's up to you to decide where you think we are in this kind of cycle. But first stage, we have panic because of uncertainty. So I think we've already had that for the last little while as a result of rate increases. Second, we have an action or we have lower activity, which we've seen already. Sales, like actual sales volume, not prices, but total number of trades is down by 40% right now. So we're having lower activity. Then we have buyer confidence resurface, which we've kind of talked about already. I don't know if we've peaked with the buyer confidence resurfacing. Again, I think we're still, I'm trying to figure out if we're here or if we're here. Are we before the third phase or are we after the third phase? And I think we'll figure that out once we figure out the kind of neutral zone, the termination, going back to the termination slide. The fourth is that we have fewer sellers list their home, right? Because sellers are like, well, if my house was worth 1.5 and it's gone down to 1.3, I'm not in any urgent rush to sell my house. I'm just going to not list.
Right.
And then we have fewer listings that come to market. And then we're back in a buyer to listings ratio being out of equilibrium. And then we start to see sales increase as buyers. So I don't know where we're at right now. We're either here or we're here, in my opinion. But at some point in time, we have to figure out, again, what are kind of like the factors that are going to affect how sustained this pullback is going to be. And I think the three kind of levers are market confidence, which we don't have a lot of right now. And I think a lot of this, we can talk about numbers until we're blue in the face, but a lot of this is mental for most people, more than anything. So market confidence, which we don't have a whole heck of a lot of. If market confidence resurges, then we'll probably see the market go back up. We're seeing a pullback because there isn't a lot of confidence in the market right now. If we see demand reduction, so unemployment rates skyrocket, if rates continue to increase, this could pull back demand. Or if we start to see an excessive amount of supply hitting the market. So if we see a bunch of new houses coming to completion, which I think is unlikely given like the trade strike and stuff like that. I think this one's very unlikely. Or sellers being forced to sell their house against their will. So not being able to make their mortgage payments, all that kind of stuff. I haven't seen this yet. I haven't seen this at all. And I think this one is the lowest likelihood. I think we have seen a reduction in demand, but I don't think people's actual desire has gone away to own a home. I think the demand has reduced as a result of their confidence in the marketplace. So I think it's kind of a trickle-down effect for all of these things. So in order for us to see this as a prolonged pullback, I think we have to have those three things come into effect to see this continue to pull back. I think this one's unlikely, and I think this one is a result of this one right now. So if we see market confidence, again, kind of like the mental aspect of this, come back into the marketplace, I think we go back up. If the market confidence continues to stay down, that's probably how we'll continue to see this play out.
Yeah, I agree. And I'm going to throw in that my immediate prediction is that what the rates are going to do in the next quarter is really that's where the wait and see is coming, because then people feel like, okay, it's going in this direction or it's going to stop. Like if they don't do anything at all, then I think that will conjure a bit of confidence.
Yeah.
And I mean, ultimately, my feeling, if I may be so bold, is to say that it's almost neither here nor there. We still have very low interest rates. So 0.25%, I mean, it does make a difference, but I don't think that it necessarily indicates one way or the other.
Yeah.
And also with the combination of inflation and rates going up, there has to be a bit of a ceiling. I feel like the government is just, they're trying to activate the emergency brake. So they're doing these hikes, and until they're confident that I think they want to just stall the market and reset it. You know, it's like the defibrillator. So we're going to scare everybody with these rates, stop everything, and see where it resets. Unfortunately, the problem is I've seen that before, not so long ago.
Yeah. Well, there's always, at the end of the day, if you look at, again, these 5 stages, it's just, we're going to get to, it's like, how long does it take us to get from stage 1 to stage 5 at the end of the day, right? And I agree with you. I don't want to get too political on this, but I think it would be very unlikely for the government to just allow our housing market to crumble as a result of just continuously increasing. I think I agree with you. There's again a lot of messaging that can go out that instills fear. But going back to the 1,500 calls that we make, it would be shocking to you to hear how many of those calls that people say, well, I'm going to wait until the June 1st announcement. And I'm pretty sure I'm getting back into the market July and August. So that is where my, if I'm looking at the next kind of like 90 days, July and August are going to be the biggest months for activity that I'm going to be following, because those are the 2 months that I am hearing come out of people's mouths the most.
That's really interesting, because July and August is also when, a lot of people just go on holidays. So it would naturally be, there would be an inactivity. And because everybody thinks that that's going to be the time to strike, you could see the opposite happen, and it could be a mass fury, which would have the opposite effect of, like, if I'm going to wait until the summer, because I think it's going to be a big, good buying opportunity, it could actually have the opposite result if enough people think that,
That's kind of usually what we see, right? And it's like this race to try and get back into the market before it gets back up. And it's like, whoa, that's timing the market, which you should not do. So the advice is likely not to try and time the market. The advice is find something that you really like, that you can afford to pay, and would make you really happy to live in there if you're buying something else, right? And if you're selling, understand what the motivation is, have a good strategy, and stick to your guns. Don't FOMO or panic sell and get rid of your property right now at a discount if you don't need to. Have a good strategy, and if you want to get rid of it, go to market, test the market. If you get the price that you're looking for, fantastic. And if you don't, and you can still afford to make those payments and continue to hold on, then I don't think it actually makes a whole heck of a lot of sense to sell. I think a lot of this comes down to, people are not going to be motivated by the market. People are only going to be motivated to transact right now based on their own internal motivations. Death, divorce, the landlord sells the property, whatever it happens to be. Those are the people that are probably moving right now, and everybody else is like sitting on the sidelines. And when people start to rush back in, then that's when the FOMO happens and we start to get the calls. And then, another thing that I was saying to Peter before is, like, the sales cycle for people has changed. January, February, getting people to the door to open a door, easiest part of the sales cycle. The first half of the sales cycle was so easy. The second half of getting an offer accepted was the challenging part. It would be like 4 or 5 offers, 6 offers. So the beginning half was super easy. The back half was very challenging. It's completely reversed. Getting people to the door now, extremely challenging. Getting an offer accepted, easiest part of the whole thing.
Really? Yeah. Just goes to show you that there's so many different levers to pull.
Yeah.
You got time of the year, time in the market, personal situation. So it's hard to paint it with a broad brush, right?
Totally. Yeah, you got to figure out what your personal situation is in your personal market and make a decision based off that. Don't paint the market with a broad brush. That would be
do what's right for you.
Totally. But that's all I got for you. I appreciate you being on here today, Andrew, too.
Yeah, well, thanks for joining me. I mean, I guess I was joining you.
I guess if we look at it that, for sure.
But of course, if you liked what you see here, everybody, don't forget to like and subscribe. And if you haven't already set the notification bell, you're going to see Emma here every month. You won't see me every month, but you'll see Emma every month. And she's got a lot to share here. So thank you for being with me and me with you. What's your handle, your preferred handle?
Pace of Base. That's if you want to find me, Instagram is the easiest way to get a hold of me, and it is at Pace of Base.
Right on. And I'm at Andrew Cox REI. I'm happy to answer any questions as well. All of our information will be in the comments. Thanks again for joining us, and have a good day.